Welcome back to the last video for Shades Trading course. We're going to go over the Shades Trading Strategies section. Here is where we talk about what makes me money and how you can use my strategies so you can also make money in the markets. And as you can see here, you will be provided with an Excel table with all the strategies, all the information you need to get started. So let's jump into it, guys. Buckle up. It's going to be a long one because we have to really go in detail here so you understand how I use these strategies. And also, I'll touch on the many variations of the strategy that I use. In case you don't like my strategy, maybe you are a little more risk averse and you want to use something that requires a little more of a tighter stop, and then you move it up to break even because maybe you just really are that much loss averse. You're that loss averse that you want that kind of strategy where you kind of always move up your stop to break even, to lock in profits, and to play for free. And some people are like that. Someone like me, though, you might not want to use that kind of strategy because it might not work for a specific stock because it's so volatile that setting a tight stop would get you stopped out before it even runs. So sometimes you have to give it breathing room, and we're going to touch on all that. It's very important that we go over every minute detail. So we're going to get started with options. For options, I mainly trade SPY and NVIDIA. For SPY, we're going to start with SPY. I use the 4-minute time frame, a MACD of 12.26.5, a momentum indicator of 5, and an RSI of 14. So let's show you that right here. This is my options setup. When I'm only trading options and focused on options, the one thing I have in the top left corner is my positions because I have to know what's going on. Am I in the green? Am I in the red? How is my contract moving? And then afterwards, after I take the profit or the loss, I look at my realized gains and losses and see how much I made for the day or lost for the day. So that's what I have in the top left corner. Underneath that, I have the SPY options chain, and underneath that, the NVIDIA options chain, because I always have to be ready to take a position once the crossovers happen on the MACD, momentum indicator, and RSI. Okay, so that's my setup, just showing you my setup. As you can see, I have a SPY 4-minute chart and an NVIDIA 4-minute chart, properly labeled too, so I know. And throughout the day, as the market is moving, I'm keeping a close eye on both of these at the same time, while also being ready to take a trade at any point at market order. Now, with the setup out of the way, again, if you want to go to the top right hand corner here, click on graph table, and you can just set the time frame to 4 minutes, custom minute, and then just type in 4 minutes. I use candlesticks, and I go to studies, view all studies, just showing you how to set everything up. Click on momentum, and then set it to 5, set the period to 5. And then do the same for MACD. Click on MACD and change the 9 here for period 3 to 5, and you're good. That's it. That's all you need to do. You don't need to do anything else. And the relative strength indicator, you just click on that, add it, and that's it. Don't touch don't change the period. It stays at the default. So with that out of the way, you click OK. Now you have the same exact indicators that I do, assuming you're using Schwab's. If you're using something else, I can't guarantee anything because I don't. Some some indicators behave differently on different platforms, just to be clear. So can't guarantee that you'll make money, first of all, but I can't guarantee it at all if you're using something other than Schwab. I don't know how different indicators on different platforms can behave differently and give signals that are different from the ones I get here on Schwab, just to be clear, because I've tried it. I've used Moomoo and other charting platforms, and sometimes I don't like the way maybe the calculations are different for those companies. But anyways, I don't want to get into all that. Now you have the same exact setup as I do. And as you can see here, let me remove the support lines and the rectangle here. As you can see here, let me show you the system that I use. Shades personal system. This is the one I use. Anything in green, anything inside a green box means that that's the one that I use. Anything in gray, those are variations to the strategy that I use, but I don't use them personally because they're not for me. I kind of prefer to stick to my system because I like systems over discretionary strategies. We'll go over that in a bit. But for SPY, the 4 minute time frame, entry on crossover on all indicators. The exit, you exit the trade at the 4 minute timer. So what does that mean? 4 minute timer. I know some of you are like, wait, what? 4 minute timer? What are you talking about? Okay, so I trade the 4 minute time frame, right? And you can see here, stop loss, none, risk management, none. You take what the market gives you in the 4 minutes that you are in the trade. This is a trading system. All you do is click buy, then click sell when the 4 minute timer goes off. Get rich slow. I'm not even playing with you right now. You can literally go to stopwatch, set a 4 minute timer, and then when that 4 minutes is up, you exit the trade. So even though there's no stop loss, you're exiting the trade as soon as those 4 minutes are up. So as soon as that candle finishes printing, essentially. And that is your exit for this strategy. And I'm not joking. Let me show you my Charles Schwab P&L for the past, since Monday, 6/5/2023, since Monday, I believe, yeah, since Monday, I've been trading options and keeping track of everything on a small account here in my Schwab trading platform. And you can see here, SPY options specifically, get $3 gain here, 17, 11, 11, 17.68. And I'm only going in with one or two contracts at a time, as you can see very clearly. So it's not like I'm going in with a large amount of money. And even then, my net profit, not including the Target and Tesla and Nvidia gains, and not including the Nvidia loss, because I'll go over Nvidia in a little bit. But yeah, overall, as you can see, green on this one, green on this SPY option call, green on this SPY option call, green on this SPY option call, and one small red loss, $1.32 loss, no big deal. So as you can see, so far I'm up. When I take a loss, I take a very minute loss. When I take a gain, yeah, I don't make hundreds of dollars because I'm mainly going in with one contract or two at a time, but I make way more relative to how much I lose. And we'll go over Nvidia. Don't worry. I know you're wondering, wait, $23 loss on Nvidia, huh? Nvidia is a lot more volatile. So when you're wrong, you take a much bigger loss. Again, we'll touch on that in a little bit. So as you just saw there, it is profitable. The strategy, the trading system does work, but you have to be disciplined. Take that as soon as that timer goes off, that 4 minute timer goes off, you take what the market gives you. Now, this is only a crossover strategy. We don't short, we don't buy puts. This is focused mainly on buying calls on a crossover. So you can see right here, we get a crossover right here on the MACD. But remember, it has to cross over on the RSI above the 50, above that median line here. And the momentum indicator has to cross above zero as well, above that median line that's also here. So even though we have a MACD crossover, let's look at the momentum indicator. It also gave us a crossover. It is above that median line, but the RSI is not above its median line. It's not above 50. Notice that? So do you take a trade here? Yes, you do have a crossover on the MACD, and you also have the momentum above its median line, but the RSI hasn't gone above 50. It hasn't gone above that median line. So anyone who uses just a MACD to enter a trade, they would have entered a trade here because they're just trading the MACD and not looking at anything else, and they would have gotten screwed because you can see a big red bar to follow, and it dropped quite a bit. But someone like me who uses the RSI and the momentum indicators as well and require crossovers on all of them to enter a trade, I would have looked at this crossover and gotten ready to maybe take a trade, but I would not have taken it because I would have looked at the RSI and you can see it didn't cross above that median line. So that tells me, hey, don't take a trade. If the crossover doesn't happen on all of them, don't take a trade. Now, it's funny, it comes back down, and then it kind of comes back up, and then it kind of just goes sideways here before finally getting another crossover. We get a crossover on this beautiful green candle, and you can see very clearly. Remember, we take a trade when crossover happens on all of them. So we got a crossover from the MACD. Fantastic. The momentum indicator just crossed over too. And the RSI has not crossed over, so we cannot take a trade. But here it happens. It crosses over, the RSI finally crosses over its median line here, and we would have taken a trade because it meets the criteria. We already got the crossover in the MACD. We already crossed over on the momentum indicator. Now we wait for the RSI and we get the crossover right here on this candle, and we would have scalped that one from 429.65 to 429.80, which is not a lot because SPY isn't that volatile relative to Nvidia or Tesla or any other volatile stock. But still, you would have made profit. Not a lot. Like I said, $10, $20 at most. But that adds up. And when you take a loss, like I said, like I showed you, it's small relative to how much you make. And so here you would not have taken a trade because you didn't get the crossover on all of them. But here you did because you got confirmation from all of them that, like, hey, it's time to take a trade here. Crossover here. The crossover already happened over here. We were above the median line when it got to this point. So you take a trade here. 4 minutes go by. You take what the market gives you and you make a profit. Small profit, only $10, maybe 20 at most. But that adds up over time. And that's the strategy. That's it. I just showed you. You just have to wait for everything to be above the median line. Wait for that crossover on all of them, and then you enter the trade. If you had entered the trade here, just using a MACD and nothing else, you would have gotten screwed. But because I use everything else as confirmation, I was able to avoid this loss and actually make a small gain here. I know some of you are thinking, wait a minute, why didn't you just take a look at that MACD crossover right there? You could have taken a trade there and captured all this. In fact, if you zoom out, if I didn't set if I didn't set a 4 minute timer when I entered the trade here, I could have captured actually all of this move here. I could have captured, instead of measly $10, I could have captured probably, yeah, probably like $50. I could have captured 5 times more profit, right? But I'd rather go for the guaranteed, even if it's not a lot, I'd rather go for, you get in when the crossovers happen and you take profit when the 4 minutes are up. That is called being disciplined. It's called not being greedy, and it's called taking what you get. And sometimes you're going to get a small loss, and that happens. But it's small, mainly because SPY isn't so volatile. Now, if you want to capture more profit, that is possible, and that's why I have the variations of this strategy. I like to use this one. I like to use the system. It's a get rich slow. You're not going to make much, especially with a small account, maybe $10, $20 a day at best. But that adds up over time, of course. So keep that in mind. The variations for this strategy variation number one, which I don't recommend, especially if you're a beginner. The one thing The reason I don't recommend this one is because if you can't handle the emotional, psychological side of being in a trade, you must be disciplined and take your losses. You can make way more with this variation since you are holding longer than 4 minutes. But the one time it goes against you and you decide to get emotional and not cut your losses, you will give it all back or blow up your account for experienced traders only. So that's like the biggest thing is I use the trading system because it keeps me disciplined and I just take what I'm given within that 4 minute candle. But I obviously miss out on this entire move here where I could have made 5 times as much, right? So if you want to capture that much, you're going to have to treat it like a discretionary strategy instead of a system where you're just an algorithm who clicks buy and clicks sell and you just stick to the game plan and you take your profit in 4 minutes or loss in 4 minutes or whatever happens within that 4 minutes, you just cut it and whatever happens, happens. Instead, you have to keep an eye on everything. The entry is still the same, but everything else is discretionary. Everything else is up to you. So you still take the trade here like I did with my system, but you might hold on longer. You might hold and sell here and you'll make more, maybe like $10 more. and then it pulls back, and you might decide to sell here because you're like, I'm not liking this pullback. But maybe you continue to hold till end of day to see how much you make. And if you held till end of day, well, you probably would have broken even or something. But yeah, so that's the thing with discretionary, is it's up to you to decide when you're happy with the profits. And there are going to be times where you might hold too long and it actually ends up in the red and you lose money. So that's kind of the downside to that. That's why I'm saying you have to be a little more experienced if you're going to use a discretionary method. So that's one variation. If you want to more profit, capture profits that I wouldn't, because I get out in 4 minutes and you're actually able to potentially capture all of the move here instead of just that 4 minute move here. But it comes at the cost of sometimes taking bigger losses. So that's again up to you to decide if you what you want to use and what you're comfortable with. Strategy variation 2, it's a beginner friendly. It's good for people who work a job, who just want to execute a trade and not worry about watching the charts. This strategy will make you more money and cause you to take less losses if you practice aforementioned risk management. Risk management, tighten trailing stop as it goes in your favor or manually scale out your contracts. So that's the risk management aspect. Your entry is still the same. Still the same thing. The entry is always going to be the same. It's going to be crossover on all indicators. And your exit is going to be when you get stopped out. So again, perfect for someone who works a job or just doesn't want to keep track of the charts. You enter the trade and you just set a trailing stop and you just walk away and do whatever until you check on it later and maybe you made quite a bit, maybe you made nothing, maybe you took a small loss. Again, at this point, because you're using a trailing stop, it's going to depend on how much the market moves in your favor. So someone using this strategy, the trailing stop strategy, can effectively, when I entered a trade, where was it again? When I entered a trade right here, I took profit right here. You using a trailing stop, you might actually capture this entire move and then get stopped out somewhere around here because the trailing stop again locks in profit for you as long as the SPY continues moving up, which it did. But at some point it did pull back quite a bit, but you still would have captured more profit than me because of that trailing stop, right? So that's like the positive thing about the trailing stop strategy, that variation of it. But on the negative side is that sometimes, because it's a trailing stop and you do have to give it some breathing room so you don't get stopped out too early as it's moving up in your favor, sometimes you will get stopped out a little sooner than you might have. And sometimes you'll just get stopped out and take a much bigger loss than I would using the trading system. Because just because you set a trailing stop, it's not a guarantee that it's going to go up and continue trending. Again, this, you will make more if it trends in your favor, but there are going to be times where you enter a trade. Let me see if I can find an example here. Here's a great example. There will be times where you enter a trade, like right here, crossover on the MACD, crossover on the RSI, momentum is above, it's above the median line, and it recently crossed over as well. I would have taken a trade here on this candle, and as you can see, it opened here and it closed here. I would have made money, a very minute amount. As you can see, it went from 430.12 to 430.20. You using a trailing stop, it would have stopped you out down here somewhere on the next red candle. You would have gotten stopped down and taken a much bigger loss because you would have taken an actual loss, whereas I would have broken even or just made a tiny 68-cent gain. Because again, I'm disciplined. I get out as soon as that timer goes off in 4 minutes. You using a trailing stop, as you can see, it didn't go up in your favor, right? It didn't continue trending upward. It came down on a huge red bar. So you would have taken a bigger loss, and that's kind of the downside to the trailing stop. So you have to hope that it's a nice trend day, and then you can capture quite a bit of profit. So there's the pros and cons of that one. And finally, the third variation, it's called the loss averse variation because you enter again the trade, you enter it on all when all indicators cross over. And this variation is for people who want the benefit of losing as little as possible thanks to the tight stop, plus moving it to break even as soon as possible. But it does come at the huge cost of potentially being stopped out right away before it runs up. So that's like the downside. For risk management, move up your stop loss to lock in profits or manually scale out your contracts one at a time or two at a time or whatever it may be, depending on how many contracts you're buying. Your exit is when you get stopped out, of course, and you start the stop loss under the previous candle wick, then move it up to break even as soon as possible. So again, more for risk averse people. Let's go back to my example here. Let me remove all the arrows. So again, using my trading system, I enter here, I get out here. The trailing stop system, or strategy, I should say, it might capture all of this trend. And the discretionary trading strategy, that version of it, they might take profits here or here. Or it's discretionary, who knows? And someone using this strategy, I gotta stop calling it a system. This strategy, you'll enter the trade when I enter it, but your stop loss is here, and then you move it up to break even as soon as possible, and you kind of just continue moving it up to lock in profits. Eventually, you would again stopped out probably on this red candle here or on this pullback here. So you still would have made it a little more than me, but not by much. It's another strategy where if it trends hard, you can make a lot, but the downside again is that you might get stopped out real quick with that strategy, with the loss averse strategy, as I like to call it, because you enter the same trade I do at the same time. Here's your entry, just like me, but it is possible that you get stopped out real quick. It's possible that it pulls back because there's some wicks here. You can see these wicks. You see that wick? It's possible that you enter a trade here, your stop loss is here, and you get stopped out on that same candle, and then it moves up in your favor. So you get screwed because of that tight stop. So that's the downside to that strategy. Yes, you'll take smaller losses because of that tight stop and moving it up to break even, but there will be times where you'll take losses, but it's kind of like because you don't give it much breathing room, you take a loss and then it goes up in your favor, and you actually lose a little bit instead of having made money. You get what I'm saying? So that's like the downside of that. The upside, of course, is you will take much less. You'll take less losses, and when you do take losses, they're minute compared to everyone else because you're so focused on uh, losing as little as possible at this point. So that's kind of why I call it the loss averse strategy. So those are the variations. I don't use them. I stick to the system just like a robot, just click buy, click sell, and that's it. Within 4 minutes, I'm out. And if I made money, great. If I didn't, oh well. But I make more than I lose, as I showed you on my trading portfolio there for the past 5 days, because I wanted to show you guys like how much you can make in 1 week. So around $50 a week with just going in with $150 buying one contract on SPY only. And this is quite a long video. Holy crap. I've only been talking about SPY and we still have to go over NVIDIA. Okay, you know what, guys? I'm gonna break this. Yeah, I'm gonna have to break this video down maybe into sections because, okay. Now let's move on to NVIDIA. SPY. All right, guys, now let's move on to NVIDIA 4-minute MACD, 1226.6. Momentum of 5 and an RSI of 8. I'm sure you've noticed like, oh wait, that's different from the SPY. Yes, it is different from the SPY. We're using different numbers because same indicators, different numbers because NVIDIA is so much more volatile and it can give you a lot of false signals. So we have to be careful and we kind of have to mess around with the numbers here on the MACD and momentum and RSI to make sure that we get as little false signals as possible. So that's why it's different from the SPY, mainly because of the volatility. And for NVIDIA, the entry point is the exact same, the crossover on all three indicators. The system that I use for NVIDIA is the stop loss, none, risk management, none. I exit as soon as the 4-minute timer goes off, and that's it. You take what the market gives you. It's a trading system. You just click buy and sell, and when not 5-minute, when the 4-minute timer goes off, you take profit or the loss, whatever the case may be. You just take what you're given, get rich slow. The difference between this and the SPY system above here that I just explained is NVIDIA is more volatile and can move multiple dollars in the same amount of time, thus netting you more gains relative to the SPY system, but also more losses when you're wrong, of course, because it's more volatile, right? And let me show you that volatility. Let's talk about NVIDIA now. As you can see, let me show you how volatile it is. In a matter of what? In this candle, in this 4-minute candle, it went from 390 to, yeah, it went from 390.32 to a high of 393, and then pulled back from 393 to 392. So just to show you, it took 4 minutes to move $3 up and down, whereas the SPY moves cents, at most 40 cents in that same time frame. So you can make a lot more, but also be aware you can lose a lot more. So that's the difference between NVIDIA and SPY. Just wanted to clarify that. So if you don't like volatility, don't just stick to SPY. With NVIDIA, you can make more, but you can also lose more. Now the strategy is pretty much the same. You wait for a crossover. We get a crossover right here. I have to show you an example so you know what I'm talking about. You get the crossover here. Crossover happens as well on the RSI and the momentum as well. So this is a valid entry. You enter here at 387.02. It closes at 388.20. So a nice dollar move there. And you would have made like 20 to 50 bucks depending on the contract that you bought. So you made a lot more, of course, compared to SPY because it's more volatile and it moved up a whole dollar compared to just 20 to 50 cents. And on top of that, I mean, yeah, I get it. We could have captured more. If I used a discretionary trading strategy, I could have captured way more. I bought at 386 point, I bought at 387, let's say, sold at 388.21 when the 4-minute timer goes off. But look at that, I missed out on $2 extra if I had waited to sell at 390.44. So I could have made like $150 compared to just making 50. I could have made 3 times as much, which is insane. But that's because of the volatility that comes with NVIDIA. But I stick to my system. That's just what works for me, guys. If you want to use a variation where you can capture more profit, you have to be ready to take more losses and bigger losses too. Again, when you're wrong, if NVIDIA decides to dump or pull back, when this thing pulls back, look at this, 390.52 to 387.50. When it pulls back hard and it hurts. So be ready to take bigger losses if you're not using a trading system. If you're going to use the variation, there's only one variation for the NVIDIA strategy. And it's the same one as SPY. It's discretionary. And you decide when you take profit. You decide your stop loss. You decide your risk management. You decide when to get out. And so I would have made money here. You using a discretionary trading strategy, you might have captured this entire trend. You might have sold here or here somewhere, or maybe on the pullback here. You maybe used the MACD cross under to take profit. I don't know. It's up to you. That's why it's called discretionary. But we both would have made money either way on this trade. But you being the discretionary trader that you are, you would have captured way more clearly, especially because of that volatility. I would have only captured that small, minute, like maybe $2 move, whereas you would have captured maybe $3 to $5 in profit. So that's kind of, again, the downside to using a system is I'll capture less profit. But it keeps me disciplined and I just, execute the trade and get out at 4 minutes. So, and it still works. It still makes me money. And look, sometimes it's so volatile, you'll make more than you expected, and sometimes you'll make less because it can pull back. Like I said, I just showed you, it can pull back even within one candle. Within one candle, let me pull up NVIDIA here. Where is it? There we go. Even within one candle, look at this. Look at this green candle right here. In a 4-minute candle, it went from 388 to 389, but it pulled back a whole 50 cents. Here, again, came up as high, it went as high as, it went from 390 to a high of 393, but pulled back almost a whole $1.50. So the pullbacks on these are strong. So there's times where you're going to make more, you're going to make less. But one thing's for sure is when you take a loss, it's going to be bigger compared to SPY because of the volatility. So again, NVIDIA is perfect if you like volatility and you want to make way more compared to just day trading SPY, which is moves slow compared to NVIDIA in that same 4 minute time frame. And that's the only variation for NVIDIA. The other two, I don't recommend. I don't recommend using trailing stop for NVIDIA because you would have to. It's so volatile and it can pull back like a dollar or two in a minute. Literally in a minute, it can pull back a dollar or two. So you would have to set a trailing stop that's really loose, which equals more risk, of course, which equals a bigger loss if it stops you out. And because it's just that volatile. So if you want to test it out, go for it. But I've tried it and I end up getting stopped out, even with a wide stop. It's just too volatile. It can go up and down $3 in one candle. That's insane. And your stop loss would have to take that into account and be really, really, really wide. Like you would have to set a stop loss, like really it would when you get if you get stopped out, if your trailing stop takes you out, you're gonna take quite a loss. Let me put it that way. It's not worth it. So it's too volatile, and that's why I don't recommend using a trailing stop. But if you want to test it, go for it. The third variation, again, too volatile for tight stops. NVIDIA can stop you out within seconds of entering the trade because it's that volatile. So the loss averse strategy does not work. You will get stopped out real quick. So we only have the system that I use and the variation of it where you kind of just are discretionary when it comes to taking profit. The entry is the same, of course. So that's it for NVIDIA real quick because there's not many variations you can use. And it's pretty much the same thing. You get the crossovers, you jump in and you take your profits, but there aren't many variations that work because of its volatility. So if you like volatility, NVIDIA is for you. As you can see here towards the end of the day, we got a crossover here on all indicators and here as well on the MACD. You would have entered at 387.34 and taken profits at 387.64. So small amount of gain, but usually towards the end of the day, the volatility goes down. So you're probably not going to be trading till end of the day, I would hope, because that would mean you're just watching charts all day. Screw that. Take your one signal back here and or back here and move on. That's what I do at least. So that's it for NVIDIA. Holy crap, this video is going to be so long. Please watch it in sections. Don't try to digest all of it in one video. But again, for NVIDIA, 4 minute time frame, the MACD is 12.26.6. The momentum is 5 and the RSI is 8. Again, different from the SPY. Again, we have to take into account NVIDIA's volatility. Let me take a drink of water here. Small, like 10-second break. Oh, that was refreshing, guys. Okay. Mara value swing strategy. We're gonna touch on swing strategies now. Mara, Riot, and Palantir are my swing trading stocks. I focus on those because they have a history of recovering from going down. And when stocks go down, they come back up eventually, especially the ones that show a lot of strength. Those stocks are Mara, Riot, because they follow Bitcoin. I believe that as long as Bitcoin stays around, I don't think Bitcoin's going anywhere. So as long as Bitcoin is around, Mara and Riot are gonna follow Bitcoin. So when Bitcoin goes up, Mara and Riot explode 10-20%. And we try to capture those profits. And just like gold, it's not going anywhere. There are gold miners, and gold's not going anywhere. So when the market goes up, when Bitcoin goes up, when gold goes up, guess what happens to gold miners? It goes up too. So as long as Bitcoin doesn't disappear off the face of the earth, I believe Mara and Riot will be worth more in the future. But also, they have a history of recovering, and I'll show you that here on the charts. Palantir is just a good stock for the long term, has good fundamentals, and it keeps breaking out every time it has earnings. So that's why I added this one recently. I think it's going to be a good money maker for day trading, swing trading, and for the long term as well as an investment. Now, let me show you Mara here. Oops, not that. Let me pull up the daily chart here. Okay, so Mara. I might lose my voice in this video. Mara, as you can see, it comes down and then it comes back up. It's within a nice trading range very clearly, right? You can see that we're going sideways. So pretty simple strategy. You buy low and you sell high. You buy as close to down here as possible, even average down if you have to, and then you sell up here somewhere. That's it. That's all there is to it. Riot, guess what? Same exact thing. You buy down here and you sell somewhere up here. Nothing nothing crazy. I don't set a stop loss because I have that many balls. No, that because I have balls first of all, and second of all, I have a lot of conviction, and I know and I believe. I shouldn't say I know. I believe this will be worth more in the future, anyways, because I don't think Bitcoin's going anywhere. And this thing just has a history of comebacks. Look at this. It dumped to a low of $3, and look at that huge comeback. Same thing with Mara. Same thing with Mara, guys. Dumped really low to $3 and a huge, enormous comeback as well. So I don't think this is going anywhere. Even in fact, I want it to go back to $3. If I'm being honest, I want to load the boat down there again. That's a lot of money. Easy 500% gains if we can buy back down here. So again, I'm not scared. I don't set a stop loss. That there's no reason to because I have that much conviction. Now, that may not be for you. You might set a stop loss, and that sucks for you because if you buy down here and then you get stopped out, you take a loss. Whereas I don't set a stop loss. I wait. It'll come back up for me. It does come back up for me, and I make my money. And so that's my philosophy. Uh, if you're gonna use a stop loss, I cannot say that you're gonna make profit using my swing trading strategy because I make money because I don't use a stop loss because I don't get stopped out. So I'm surprised people use stop losses for swing trading. That's weird. I don't know. I just think that's odd. You should be keeping an eye on it day to day, and if things aren't looking good on the charts, then you take the loss. You shouldn't have a hard stop, in my opinion, but again, everyone's different. So just making sure that you know that I don't set a stop loss, and I feel that because I don't set a stop loss, I make gains and a lot, and I don't take losses. It's very rare that I take a loss on Mara or Riot. So that's it. It's pretty simple. You buy low, you sell high. That's not complex. In a bull run, here's what a bull run looks like. It just keeps creating new highs and new lows. So you want to buy the pullbacks. You want to buy the pullbacks. You want to buy the pullbacks. That's it. It's not complex. In a bull run, you buy the pullbacks. You buy the dip because it's just going to continue creating new highs. Here's Mara's bull run. Look at that. Notice something? Notice something about this entire bull run move here? Yeah, it just keeps creating new highs and new lows. So you just buy the dips, buy the dip, buy the dip, keep buying the dip because it's gonna come back up. That's the great thing about bull runs. A sideways market, you just buy low, sell high. That's it. That's all there is to it. I'm not. I don't think I need to explain that in detail. Pretty self-explanatory. Same thing with Palantir in a bull run, which it is in now. Buy the pullbacks, buy the pullbacks, buy the pullbacks. Even oh, buy the pullbacks, and it was profitable. And you can even buy, even if you buy the top. Here's the great thing about a bull market. Even if you buy the top, even if you buy the top, even if you buy the top, guess what? Because we're in a bull market, it continues to break out and create new highs. So you still would have made money regardless. Isn't that stupid how that works? So there you go. If Palantir starts to go sideways, then you switch over to the sideways strategy and you buy down here and sell up here. Again, nothing complex. It's pretty simple. I don't set stop losses, just to be clear, not for my swing trading strategies. Just wanted to clarify that, and I think that pretty much explains it. Again, in a bull market, identify current support and resistance, buy on dips or at key support levels. Sideways market, identify current support and resistance, draw a median line, buy under the median line price point, sell above median line price point. Let me just demonstrate that here on Palantir. You can see we're trading within a range here, at least back then. And here's your median line. Boom, you want to buy under 7.99 and then sell above it. That's it. I hope that's not too complex because it's, to me at least, it seems pretty obvious. what you should be doing in a bull market or sideways market. I don't include bear market because who wants to buy something that's not going to continue to go up? So yeah. So in a bear market, just don't use these strategies because you're going to lose a lot. So don't use it in a bear market, just to be clear. Now let's move on to penny stocks. Penny stock, we buy bottom strategy. Another strategy that's pretty self-explanatory. Penny stock should have a history of run-ups. Companies should be active on social media. Penny stock has to be near its bottom. Your entry point is near the bottom. Sell targets are your exit. Stop loss if the bottom falls out. Another one that's pretty simple to point out. IBIS, it it has a history of run-ups. We know that. We can just zoom out and see that it has a history of run-ups. It does drop PRs and catalyst. It is active on social media. So there's the second criteria being met, and it's near its bottom. So that's the third criteria that it's met. If it meets all three criteria here, then you enter at bottom. So you enter somewhere down here at 3 cents, as close to 3 cents as possible, because we want to buy as close to the bottom as possible. You set your stop loss somewhere underneath it. In this case, you would probably want to set it at 2.5. You need to give it some room. These are penny stocks, so you have to set a pretty loose stop. You don't want a tight stop on penny stocks. You want a loose stop. So you would set stop loss down here somewhere. You would enter somewhere in this zone here to get in as close to 3 cents as possible. And then your sell targets are going to be wherever resistance is for that stock. Sell targets. So we have resistance here, here, and here, and here. So you're going to look to sell. You're going to look to buy here, stop loss down here, and sell at those sell targets. So just like that, it's that simple. Not complex. Let me use HStub as an example. Another stock that meets the same criteria. It's a penny stock. It's active on social media. It's near its bottom, and it has a history of run-ups. So it meets the criteria. Look at that. Near its bottom, history of run-ups, and you want to buy anywhere in the zone. Your stop loss probably down here somewhere at the bottom of the zone, and you just wait for the run-up, and you take profits, and your sell targets. You got one here, 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 and there you go. Now you know where to take profit, you know where to enter, and you know where you're going to get subbed out if it breaks down. So, and that way you're protected. But that's pretty much it for penny stocks. It's again not complex. I just showed you real quick like how to do it. So just look, it has to meet that criteria. These three should have a history of run-ups. Company should be active on social media and be near its bottom. And just a matter of taking the risk. It's riskier because it's a penny stock, so just be aware of that. Sometimes it's not going to work out, and you'll have to take quite the loss because they are volatile and they are penny stocks. And there's the risk of dilution and reverse splits and everything else that goes with it. So this is I would say penny stocks are much riskier than options, in my opinion. But so not for everyone. But if you want to try it, go for it. See if it works out. Keep track of all your trades to see if your strategy works more than anything, because there's no point in using a strategy that's not working right. So that's it for penny stocks. We buy bottoms. Pretty self-explanatory. I went through that real quick because I don't know. It's not that complex. Not for penny stocks. The most important thing is that the company has to be active on social media and putting out content, PRs, that gets the stock moving. Okay. Wow, I'm going to take another swig of water here because, oh boy. Day trading stocks. Day trading stocks, as you can see here, when it comes to day trading stocks, you want to use a MACD of 12.26.5, a momentum indicator of 5, and an RSI of 14, the default. And when you're day trading, the entry point is going to be the same as always, crossover on all indicators. This time your exit is not on a timer. You can if you want, but your exit is discretionary. That's what works for me because you just never know how much the market's going to give you. With day trading stocks, you kind of want to you want to give it some room and see if it runs up more. You don't really want to set a 2 minute timer. A 2 minute in 2 minutes, a stock's not going to move that much. It'll move a couple cents, maybe at most 10 cents, but you're not going to make much. So as you can see on Palantir, I entered at 15.44, and I even called that one out in the Discord. If you're in the Discord, you've seen me call those out on Friday, or maybe it was Thursday, depending on when this video was uploaded. But yeah, as you can see, I entered at 15.44, and within 2 minutes, I did not exit because I would have made I would have scalped it for like a penny. So for day trading regular stocks, which I rarely do, I really don't like day trading regular like stocks, like buying shares. Options is just better in terms of how much you can make and the profit potential. But I do it every now and then. And as you can see, because I used a discretionary exit, I got out at 1570. And then I didn't like the way things were moving, so I took profit again at 1557. That's going to happen because you're not using a system. You're kind of just it's discretionary. You get out when you want when you feel like it. So there you go. And then I did another day trade and I got in at 15.88 and got out at 15.95. I scalped that one. I didn't like the way it was moving. And then I think if you guys remember Friday, we kind of went up and then we dumped, right? So yeah, that's the thing about day trading. Get out. You get in and you get out. But the discretionary exit is very important for getting as much profit as possible because you just don't know. Maybe Palantir goes to $17 and you miss out on a whole $1.50 move. Maybe not. Either way, the exit for this strategy is discretionary. 2 minutes is not enough for it to move any amount to make enough money to be worth it for any stock for that matter. It's not just Palantir, just any stock. Just look at 2 minute candles and see how much stock moves in 2 minutes. It's not a lot. So the exit has to be discretionary. No trading system for this. Has to be discretionary. It's on you when to exit. The stop loss is underneath the previous candle wick, and the risk management moves stop loss to break even or scale out your shares, which you can see me do here. I did scale out. So that's what I do. This is the strategy that I use. And let's go over it real quick on the charts. So this is a penny stock. We're not going to use a penny stock. Let me go over to, oops, let me see if I can pull it up, guys. Give me 1 second. I think I have to pull it up somewhere here. Regular stocks. There we go. So as you can see, I have different charts, different setups for different stocks. So if I feel like trading regular stocks, I go to the regular stocks tab and I got everything set up. I got the runners charts as well. I got the technical analysis where I just solely do technical analysis, and I have the watch list on the left-hand side. And of course, I showed you early in the video my options setup. So now you know, like this guy I have 3 monitors, so I can keep track of everything at once. It sucks having to pull up the Discord and go back and forth, but I might have to get a fourth monitor. Well, I'd have to get a computer that could handle a fourth monitor at this point because I'm using a cheap laptop that somehow is able to handle everything. Fantastic. I love it. Barely able to handle it. It runs hot though. But I digress. Let's go over, regular stocks. So Palantir, let's talk about that one. I'm using a 2 minute timer. I mean, not timer, 2 minute time frame. It's the same thing. Momentum is 5, RSI is 14, MACD 1226 and 5. And the crossover is the entry point on all of them. So let's see, what day was this? Friday? Yep. So let's look at Friday here. So Friday I got a crossover. Where was the crossover? It happened. Where was it? The crossover happened right here. It's the same thing as the option strategy. You get in the crossover on this candle. The momentum is already above the median line, and the RSI did cross over. It's already above 50, and it did cross over, as you can see here, crossed above the 70, which is also valid if it crosses over above the 70, along with the momentum being up above 0, and a crossover in the MACD. That's confirmation to enter a trade. It doesn't just have to cross over the 50, just to be clear. And as you can see, it goes from 1584 to a high of 1591. I think this is the one I scalped. Yeah, I believe so. I don't remember, but I believe this is the one to scalp. Actually, what am I saying? I have it here. Yeah, 1588 and 1595. So that's the one I scalped, I believe, because I got in up here at 1588 and then I sold up here at 90. Yeah. So this is the one where I scalped because I just didn't like how things were looking. I don't know. I don't remember why. I think SPY was dumping or NVIDIA was starting to dump. And I was like, okay, no, I'm getting out of my pants here. But yeah, so yeah, as you can see, within 2 minutes, this thing went from 1584 to 1592, and I bought in at 1588 because you're buying at the ask, of course, or you're buying it, pushing it up higher. So if I would have scalped that 2 minute timer, I would have made maybe 4 cents, 2 cents maybe. So it's not a lot. It's not even worth it. That's why it's a discretionary exit. You exit when you feel like it's time to get out. And I got out at the top of this next candle, thankfully, because it dumped afterwards. So there you go. That's pretty much it for the strategy. Again, crossover happens here, but funny enough, the momentum is up below the median line. So we don't enter a trade because the momentum is not in agreement with the MACD. We did get a crossover at the same time as the MACD. We got a crossover on the RSI. And yeah, but the momentum indicator didn't cross over. So there's a disagreement here between these three between the MACD, RSI, and the momentum. There's some disagreement, but guess what? On the next candle, we get the crossover on the momentum indicator, and we enter here at 1506, and then it comes up to a high at 1512 before dumping. So, and it comes to a low of 1502 at one point. So, again, how much you make or lose is going to depend entirely on your discretion. It's going to be on you because you're in control of when you get out. So, but the entry is the same. And your stop loss, let me go over stop loss. I think I forgot to touch on stop loss. The stop loss, so you enter a trade here. Your stop loss is on the previous candle low wick, so down here, and you take profit whenever. So, and for risk management, you can move up your stop. So here it went up in your favor. You could have moved up your stop to protect yourself, and you would have gone stop down on on the next red candle. Or maybe you decide, hey, my stop loss is down here. I entered here. Let me just take profits on the next candle. Maybe you decide to do that. Again, it's up to you when you exit. But the stop loss is always underneath the previous candle. And let me demonstrate that on the other one. So you would have bought in here, and your stop loss would have been down here. And yeah, I took profits here. You might have maybe gotten stopped out, depending on your risk management. So because it's more discretionary, it's going to vary in terms of how much you make or lose. And it depends on what stock you're trading. I mean, Riot, Mara, T Triple Q, they're all going to behave and move differently. So sometimes you might make more or less. So with this strategy, with the day trading strategy, you really want to see and figure out which stock makes you the most and gives you the most bang for your buck. If you want something more volatile, I mean, go for it. If you want something less volatile, probably T Triple Q. So again, that's the strategy, and it applies to all stocks. It's not just for one specific stock like the Nvidia and the SPY strategies. It applies to all stocks, but you do want to figure out which one works for you. Which stock do you trade that you're like, wow, this one actually, I love day trading this one with this strategy because it makes me so much more compared to trading some other stock. So that's kind of for you to experiment on, but the strategy is the same for any stock. And that's it. That's pretty much all there is to it for that strategy for day trading stocks. Again, I don't do it often. I prefer options. The variation is the setting a trailing stop. This is, again, perfect for people who don't want to keep an eye on it and just want to enter a trade and set your stop. Maybe you work a job or whatever, you just don't want to watch charts. So you set a volatility based trailing stop. I'm using the word volatility based because, again, this strategy applies to all stocks. It's not just a strategy for a specific stock. So you're going to have to figure out if you're going to trade something other than Palantir, if you're going to trade something, let's just say you're going to day trade NVIDIA, for example, which is very volatile and can move up dollars, you want to set a stop loss based on the volatility. And because it's more volatile, you might have to set you have to set a trailing stop that's very loose and that gives it breathing room. Because I showed you with the option strategy, that volatility means with a trailing stop, you have to give it quite the breathing room. So just wanted to show you that what I meant by volatility-based trailing stop. So you might have to experiment. Again, I don't use those variations. I stick to this one, and I stick to things that aren't that volatile, kind of somewhere in the middle. Not too volatile, but not too slow moving like T triple Q. And yeah, so for this variation, this is again more for people who don't want to watch charts or who work a job and just want to set the trailing stop. But set the trailing, don't just blindly set a trailing stop, set it based on the volatility of that specific stock. And the third variation is a little more hands-on. You need to put sell targets on the chart and you move up your stop to break even and then lock in profits as it goes up. So that's again more hands-on, and you have to you have to watch the charts. The entry is the same. The only difference is you're moving up your stop to break even and locking profits in by continuing to move up the stop, and your exit are sell targets. So for example, for Palantir, I would so let me type in sell targets. So I would have sell targets already throughout the day. Like I would do technical analysis the day before, and I'd be like, okay, here's sell targets, here's sell targets, and as you can see here, by using sell targets, you would have bought on that same, you would have gotten that same entry point that everyone else got, but you probably knew like, holy shit, this thing just got rejected here at a sell target. Let me take profits. Or maybe you would have sold at that sell target, right? So that's what I mean by sell targets. So you kind of have to do some technical analysis, be more hands-on, and watch the charts. So not for you if you don't want to watch charts, and or if you work a job. So that's that variation. That's pretty much it. The other the other ones are the same. Day trading runners, pretty much the same thing. Your day trading runners, it's the same thing as the yeah. This strategy and this strategy, the day trading T triple Q strategy, the same. It's the same thing as the one I just went over, the day trading strategy. It's the same thing. The only difference is it's a little more specific to T triple Q. And runners just means it's a stock that has a catalyst behind it and that's running up in pre-market and that could potentially run dollars or hundreds of percentages when the market opens. But other than that, same indicators, same values, same everything, same strategy. It's just that it's a little more specific to the runners and a little more specific to T triple Q. So I'm not going to go over those because the day trading stock strategy covers all that, uses the same indicators, same values. So that's pretty much it. Again, you can take, like I said, you can take the strategy and maybe you like T triple Q and you can take that strategy and just apply it solely to T triple Q and make your own little chart here and maybe you develop something or you change the strategy enough and make it more specific to that specific stock, in this case to T triple Q. So that is something you can do. But the strategy ultimately, you enter on a crossover and the exit is discretionary, stop loss underneath previous candle, and risk management, move up stop loss to break even, scale out, lock in profits, etc., etc. The variations are the same. So yeah, if you wanna, let's say you day trade, let's just say you day trade Shopify, you can just day trade that for the rest of your life and just use the same strategy and just keep a table that's specific to Shopify. So that's literally, with this strategy, you literally might find one stock that you're like, oh my god, I'm sticking to this for the rest of my life. Why change it, right? If it works, why trade anything else? So you might find, hey, day trading Shopify on the 2 minute using these indicators works well for me, and it just makes you a lot of money. But for me, I use Palantir, so just wanted to throw that out there. That same strategy can be applied to any stock, but definitely still have to test it to see if it makes you a profit or how it moves relative to the market. I could go on, but this isn't. I'm not going to go into detail about everything else. That doesn't matter. Let's just focus on the strategies. Oh my god, an hour-long video? Holy crap. Okay, guys, I'm sorry if I went too fast. You can slow it down by going to 0.75 on YouTube. But yeah, that's pretty much it. Went over each and every one of them, gave you examples, and hopefully this helps you out. I use the ones in green. Anything else, any variations, I don't use them. They work for me, and I'm going to stick to it and be disciplined. And that's all it is. That's all it takes. And I'll see you guys in the Discord or on YouTube. Later.